Hello, everyone. My name is Castro from YS Stocks, and just wanted to talk to you guys about a few things. Understand this is for educational purposes, so everything will be shared here would just be my thoughts, again, just for educational purposes, right? So we saw last week that the market actually closed very bullish. It rallied, given the strong numbers that we had for the jobs in June, which was actually an indication for the good strength of the economy, right? So we had about 850,000 jobs for the June, again, showing very vigorous strength for the economy in which it rallied. So we saw the Dow Jones rally, right? We're here in FinViz, and the same happened with the Nasdaq, the QQQ, and also the S&P 500. So all of them for the pretty much rally for all-time highs last week. So that closed the week on Friday. Going into this week, I just wanted to touch on a few things that I'm seeing here. Again, you can find this information on Market Watch, uh, Economy, Dash Politics and Calendar. So this is a really good website. I love to teach people how to fish, as I say. So in essence, I will provide you the information for education purposes again, so you can make the best decision with your financial advisors for us what exactly you want to invest in and what you want to look at. But some things that we're looking at for next week, really this week upcoming, it's Monday today, July 5th, and I touched on this again, but I just want to share it here with my YouTube page. So the 5th of July is a Donza, right? No scheduled activities, Independence Day, holiday, even though the 4th of July fell on Sunday. So the market is closed for today. So what we're seeing for Tuesday, July 6th, we have the market service PMI, and that's going to come out at 9:45. And what this says is just the PMI is the purchasing managers index, right? And what it does is measures the prevailing direction of the economic trends in manufacturing. So that's what they're looking at. And the PMI is based on the monthly survey of the supply chain managers across 19 industries, and it covers both upstream and also downstream activities. So really the big takeaway is that it provides useful insight for the business decision makers, market analysts, and investors, and it's a leading indicator for the overall economic activity in the U.S. So if these numbers are good, right, we can expect that the economy is recovering on par to what we're projecting. So previously for the PMI, as you can see here, was 64.8. Uh, the median forecast was 65.2. So we'll be seeing those numbers on Tuesday, July 6th, around 9:45 time frame, at least the final numbers. On Tuesday, we also going to see the ISM Service Index, and the ISM Service Index, it really talks about the non-manufacturing index. That's exactly what it is, right? So of course somebody has to add their name to it. So that's why you have the Institute of Supply Management, which actually collects this information for the index. So the ISM services is a survey. It's part of the ISM report of businesses. So it covers the manufacturing PMI and also the services PMI, right? And it serves, again, non-manufacturing or services firms, purchasing and supply executives. And this services report measures the business activity for the overall economy. So above 50 indicates growth, while below 50 is indicating contraction. So this report contains the economic activity for more than 15 industries in measuring employment, services, and also the inventory levels. So we'll see what those numbers look like for Tuesday, the 6th. Um, as you can see here for June time from the period that it covered, the previous numbers was 64%, and the median forecast was 63.3%. That's for the period June. Again, this is part of the ISM report on businesses, both the manufacturing and also the services. So we'll see if those numbers are on par for the economy getting better and healthier. So on Wednesday, July 7th, we have the job openings. And these numbers here, the previous was 9.3 million, and the forecasted, the median was 9.3 million for May. So we'll see the numbers for June around 10 o'clock in the morning, Eastern Standard Time, for the job openings. And these are And these are the job openings and labor turnover survey, the JOLTS as it's called. And it tells us how many job openings there have been each month, right? So we're looking at the month of June, how many workers were hired, how many people actually quit their job, how many people were laid off, and how many experienced any other separations, right? So which includes workers' deaths or things of that nature. So we'll see those numbers, and we'll see what exactly the market does when those numbers actually come out. And on the same date, on the 7th of July, we're also going to see the FOMC, which is the federal open market, the federal open market committee numbers. We're going to see those numbers come out. Well, not the numbers, I meant to say. We're going to see the FOMC minutes come out. And so the FOMC usually has about 8 scheduled meetings in a year. And 3 weeks later, that's usually when they actually pushed out their minutes to talk about, that covers what exactly they talked about for their meeting. Let's see here. So if you don't know, so the FOMC usually consists of 12 members, right? So 7 members of the Board of Governors of the Federal Reserve System. And then you have 4 rotational members that actually fill the seat for the year basis, right? The annual basis. And of course, as we know, the federal chair right now is Jerome Powell, which is the Board of Governors. And the vice chair is John C. Williams for this one. So we'll see what those minutes come up with. And anticipating on the 27th and 28th, really key dates that we have to take into consideration, which the Federal Reserve is going to take another stab on the interest rate and discuss inflation. So it's a really key date that we should definitely have on our calendar. Again, it's July 27th and 28th. All right, so for Thursday, July 8th, we have the initial jobless claims numbers. And for July, we had 364,000, right? That was the previous day, the previous month numbers. And the median forecast was 350,000, right? So what we're going to see here for this date here, first of all, those numbers are really great because it's going on, it's showing that the economy is actually getting a little bit healthier with the initial jobless claims numbers, right? Even though we have about 11 million citizens actually getting some type of benefits, those numbers are continuously getting healthy and better as the economy progresses and gets on the way to reopening fully, right? And that was the lowest numbers for the COVID pandemic era as the jobs market continues on healing. So like I mentioned before, there's about 11 million Americans receiving benefits through the pandemic. So hopefully we'll see those numbers get lower once that report comes out. At 8:30, roughly same time, we're also going to see the continued jobless numbers. And that's the numbers for July 3rd. And 1500, 3 o'clock on July 8th, we're going to see the consumer credit, right? And we know that when it comes to credit, the more credit you have, the better, right? More credit than debt is definitely better. So we'll see what exactly the report has entail for us and how exactly it's going to affect the market. So the last thing that we have on the docket is on Friday, July 9th, which we have the wholesale inventories. And the wholesale inventories are the stock of unsold goods held by the wholesalers. So those inventories are key components of gross domestic product changes. And the high inventory points out to the economy slowing down in the US, while the low reading points out to a stronger growth. So depending on how those numbers look, will determine how the economy looks as far as growth is concerned. So, and the previous numbers, as you can see here, was 1.1%, and the mean forecasted was 1.1% as well. On top of this, again, you can find this in MarketWatch, economy-politics-/calendar. There's also next week's, right, the following week numbers here that you can see if you scroll down on this website. But I really just want to, so you can see here from all the way to the 12th to the 16th. 21st to the 25th. And of course, as I mentioned, it's not actually on here, the 27th, 28th being when the Federal Reserve is going to discuss interest rates for the future. So that's going to be a very key dates, the 27th and 28th, really the 28th, right? In addition to this, we have a few securities underlines actually reporting earnings. But the really key takeaway is the following week, in which a lot of the banks are going to report earnings. So we go to finviz.com, finviz.com, and there's a link below that you can actually sign up for Finviz if you actually want to go to a one-stop shop where they have news as well as really good tools in order for you to help you with your trading or investing needs if you want to do that. And I'll share that link with you right underneath here. So here, just putting on I'm on the maps right now, the heat map. On this earnings date, might scroll down to earnings date. And in pink here is before earnings, and of course, plus 15 days. So we see a lot of the banks actually, the financial sector reporting earnings. So we have JP Morgan, Citigroup, right? Bank of America, Wells Fargo. So a lot of the institutions, whether it's regional banks, diversified banks, capital marks, we have Goldman Sachs here actually reporting earnings, and also Morgan Stanley, right? So a lot of heavy on the financial sector are going to be reporting earnings 2 weeks out, right? So we already, some of us already jumped on these as far as YS stocks. So because we know that the market is forward thinking, so we jumped on these because of a few reasons. As we can see, I'll just show you one, for example, JP Morgan. Looking at JP Morgan here, we saw a huge decline for the month of June, right? And being that this stock actually reports earning like at the end of the 13th of July. Again, the market being forward thinking, it's been trending a little bit up ever since that fall for the most part of June. So it's been trending up, and we got in the trade a little bit earlier, right? Just for us, and we actually did pretty well in this trade. Some of us already exited the trade, and some of us actually are still in it. But we've been seeing this phenomenon for most of the banks, whether it's Wells Fargo, PNC, so on and so forth. Again, we see here that in June, right, Wells Fargo took a big dump, right, and it's been recovering, being that it reports earnings on the 14th of July. Let's see here. Okay. Besides that, that's really all I want to share with you guys. Be on the lookout for more videos such as these educational videos in which I share what I'm looking at, what I'm seeing in the market, and then some trades that I may be interested in getting in or whatever. So one play in particular that we got in a few weeks ago, like I mentioned, we got in the POWW, which did really well, JP Morgan, and also Bed Bath & Beyond. This one did extremely well. It was up like 29% in the market. If you like videos such as these, please like the page, share the page, let us know what you think, and see you at the finish line. Have a good day.